Is it time to buy Penn Entertainment stock? What's up, everybody? Mr. Zero to Infinity says hello. In this episode, I'll be breaking down my bull thesis on Penn stock and explain why I'm buying shares in my Zero to Infinity stock portfolio. If you're one of the 4,000 plus subscribers tuning in for this episode, you already know I've been documenting one of my stock portfolios from zero to infinity with 10 plus years of investing experience. If you're on a mission of growing your own stock portfolio as high as possible, then feel free to hop aboard the rocket ship. By clicking that like button, you help support this channel by finding more like-minded individuals of building wealth in the stock market. As always, before I get started, remember this is not financial advice and I'm not a financial advisor. Always do your own research prior to buying stocks. So let's get straight into my bull thesis for Penn Entertainment. Penn Entertainment has a sports betting platform along with an omnichannel base of cash-flowing brick-and-mortar casino assets with which drive cross-play and synergies as its customer database continues to grow at a rapid pace. As of September 30th, 2023, Penn operated 43 properties in 20 states, online sports betting in 18 jurisdictions, and iCasino in 5 jurisdictions. Number 1. Penn entered into a sportsbook agreement with ESPN, which provides for a long-term strategic relationship between Penn and ESPN relating to online sports betting in the United States. Penn has rebranded its Barstool Sportsbook across all online platforms in the United States as ESPN BET and will oversee daily operations of the sportsbook. The sportsbook agreement provides Penn with an exclusive license to use the ESPN BET trademark in the United States in connection with the sportsbook. In addition, ESPN will provide certain marketing, content integration, and promotional services in support of the sportsbook, including access to ESPN talent, and will exclusively promote the sportsbook in the United States in accordance with a mutually agreed on-channel marketing plan. The sportsbook has access to ESPN's industry-leading audience and database. Number 2, get users from ESPN ecosystem to download the ESPN betting app. The goal is to funnel the 28 million monthly active ESPN app users into downloading the ESPN app. ESPN will get so many more organic touches with potential bettors than any other brand, even topping the Barstool Sports brand. Penn Chief Executive Jay Snowden recently disclosed that 73% of its total wagers in Ontario come from users who are already within the Scores Media's ecosystem. That is, people checking scores or reading news within the app. This shouldn't be different for the ESPN's ecosystem. ESPN implemented an initial wave of exclusive bet mode integrations across the ESPN ecosystem, which includes their 6-pack odds integration. This provides for a seamless click-through from the ESPN Gamecast to a customer's desired bet on the ESPN Bet app. This is very powerful as there are over 28 million monthly active users on the ESPN Media app. The Penn Entertainment management team provided this graphic on your screen during their Q4 2023 earnings presentation. On the right, you'll see monthly active users rose from about 190,000 on the Barstool Sports app in Q3 to more than 770,000 using ESPN Bet in Q4. This was a 207% growth rate year over year with the fresh rebranding under the ESPN umbrella. Plus, the launch of ESPN Bet drove more first-time depositors in 2 months than Penn management expected in the first year. I know Penn spent a lot of money on acquiring first-time depositors with promotions, so this metric, which tracks the number of monthly active users, will be very helpful moving forward. This metric proves that demand for the ESPN brand far exceeds what the Barstool Sports brand could draw in. The question is, what will happen once the well of bet credits runs dry and customers who have been betting on FanDuel, DraftKings, and BetMGM are left to decide whether to redeposit and give ESPN Bet a longer look? Investors will be less happy over the next few quarters if Penn simply rented these bettors only for them to return to their sportsbook of choice once their bonus bets run dry. Penn CEO Jay Snowden made the case that ESPN BET is keeping its customers coming back by pointing to both the continued rise in handle and third-party data showing a steady 15% share of weekly active sportsbook users, putting it solidly in third place, assuming trailing only market leaders FanDuel and DraftKings. Jay Snowden has stated that we've got engagement. That's not an issue. Our job is to continue to improve the products and get deeper integrations with ESPN and eliminate friction so that we could get people more seamlessly from the ESPN's ecosystem, whether that's media or fantasy and the like, over the ESPN Bet when they're ready to engage in betting. Number 3, drive revenue growth by increasing the parlay products, which are known to win at a higher rate for the house. Penn management announced ESPN Bet has seen a 63% increase in parlay mix and a 360% growth in parlay handle in the first 2.5 months, compared to that same span last year. Number 4, gain market share as the third major player behind FanDuel and DraftKings. CEO Jay Snowden has stated that ESPN Bet has attracted the mass market sports fan, highlighting the potential to expand the appeal of sports betting and grew the overall market. This foundation sets the stage for continued growth and market share gains as we introduce further product enhancements and deeper integrations into the ESPN media ecosystem. Since launching ESPN Bet, Penn has accounted for roughly 7% of the online sports betting handle in the United States, according to a note from Citizens JMP Securities. That is up from the 4% range Barstool had, though still quite a large distance away from the 33% DraftKings has held since ESPN Bet launched last year. ESPN Bet's marketing engine is just getting started, so there's definitely potential to improve on that total market share. Management suggested the goal is 20% market share long term. Number 5, Penn owns the entire gambling experience on-premise and off-premise. This is an omnichannel strategy. Penn Entertainment has an advantage over FanDuel and DraftKings since Penn has a geographically diversified portfolio of premier regional gaming assets. These properties will continue to provide cash flow to invest back into the ESPN Bet brand, whereas other sports gambling apps don't have the luxury of raking in profits from another revenue stream. And last but not least, number 6, Penn's investment in the ESPN partnership looks cheap. Penn has agreed to make $1.5 billion in cash payments to ESPN paid over the initial 10-year term and grant ESPN approximately $500 million of warrants to purchase approximately 31.8 million Penn common shares that will vest ratably over 10 years in exchange for media, marketing services, brand, and other rights provided by ESPN. That breaks down to roughly $150 million in annual payments to ESPN, which act as a portion of the marketing budget per year, which equates to $37.5 million a quarter. This $150 million is a flat fee compared to other marketing expenses that will go up with inflation. $150 million looks cheap to me. The agreement with ESPN provides Penn access to the largest ecosystem in sports, with 105 million plus monthly unique digital visitors, an audience of more than 370 million across social media platforms, 25 million ESPN Plus subscribers, and the nation's #1 fantasy database. Penn's ability to leverage the leading sports media brand in both the US and Canada with ESPN in the score, combined with Penn's newly launched sports betting app, will allow Penn to significantly expand its digital footprint and catapult ESPN Bet into a strong podium position in this space. Penn management has said that we believe we can achieve substantial adjusted EBITDA in our interactive segment over the coming years, and this will translate to very strong free cash flow generation for the company and value creation for our shareholders. So there's a quick bull thesis on Penn Entertainment. As for me, I think there's more upside compared to downside risk when it comes to Penn stock, around $18.60 with a market valuation of $2.8 billion. DraftKings is the juggernaut that ESPN Bet will look to catch over the next few years. Right now, DraftKings is valued at around $20 billion market cap. With ESPN Bet projected to make $1.28 billion to $1.415 billion in revenues in 2024, I think there's a strong possibility that Penn stock will be much higher than where it's trading at today. For that reason, I started to build a very small position in Penn stock. If you've been following along with the channel, I used to own Penn in the 0 to infinity stock portfolio a while back. Glad to own it again. Over the next few days and weeks, I'll look to increase my position, hoping the stock price falls lower. As always, quick portfolio update. Outside of Penn, I also own Shift War Payments and FitLife brands, along with a sizable cash position. My bull thesis for those two other stocks has been documented in my earlier episodes, so if you haven't seen those videos, make sure to check them out. That's it for now. Let's end it there. Play the music. If you made it this far into the episode, then make sure to subscribe and click the like button to support the channel. It helps immensely with the YouTube algorithm. Feel free to watch my earlier episodes of how I'm growing one of my stock portfolios from 0 to infinity. One of my favorite comments from last episode is on your screen. All my episodes are meant to be watched in order since the stock market is always changing and there are always new trends to be found as the weeks tick forward. If you have a question that you'd like me to feature in a future episode, feel free to email Mr.0toInfinityQuestions@gmail.com or hit me up on Instagram, Mr.0toInfinity. Thanks again for watching. Let's keep building from 0 to infinity. You got this. As always, do your own research prior to making any investments. Read the disclaimer on your screen fully. Remember that all my episodes are for informational purposes only. I am not a financial advisor, and anything discussed on this YouTube channel should not be viewed as investment advice. I am only sharing my personal ideas, opinions, and one of my stock portfolios. You should never take any of this information as guidance for buying or selling any type of investment or security. There are financial risks associated with investing. Peace.